Welcome back to Ep.3 of the Property People Show. Today's episode is all about the journey of a first-time buyers and what it entails from start to end and how they can be prepared to have the best journey through the mortgage buying process. I also want to take the opportunity today to introduce a new member of the team at Home Finance Centre, Vijay Rabdia, Senior Mortgage Advisor. Welcome to the show.
Cheers, Chan. Appreciate you. Thank you for having me on.
No problem. Really excited. It's you've been with us for a while. I've been really keen to get you onto this show, and I thought, you know what, being a episode about first time buyers, which you kind of specialize within your role, because most of your clients tend to be kind of first time buyers. I thought it would be best that we kind of get both those topics covered. First, introduce yourself in terms of your background, what you did before basically you came to Home Finance Centre. And I'm quite interested to also know what made you and how you got into the finance industry and what made you become a mortgage advisor, because it's not what you studied at uni. Is that right?
Yeah, definitely not. Yeah, I'll definitely get into that. I mean, first of all, thanks for having me on.
No problem.
Loving what you're doing with the show.
Yeah.
You know, creating relationships and showing people what property is really about. A little bit about myself. Again, my name is Vijay. I'm a mortgage and protection advisor in terms of bread and butter. What does that actually mean? Well, I advise on any property that people can live in. So if it's your residential property or if it's a buy-to-let property where you're housing tenants. Aside from that, we also do the commercial loans, bridging development finance. But for the purpose of this and for first-time buyers, we'll focus on the mortgage end. How did I get into the industry? So going back, circumstances at home meant that I had to grow up a little bit faster than I would have liked compared to the average person. That meant that I had to take on a lot of the responsibilities at home in the sense of, you know, the finances, not necessarily bringing the money in, but what happens with that money? Where do you save it? Do you pay down on the mortgage? Do you go and buy a new property? What do you actually do? I came from a point where I didn't understand, I didn't even know what interest rate was. I remember Googling, define interest rate, and it would give me a standard economic definition from the London School of Economics or something like that. And I was like, okay, need to look into this. The family was then introduced to a mortgage broker at the time, and they helped us get onto the property ladder and make use of some money. And that's where I really began to understand the value of money and what property can actually do. I was 17 at the time, so I really didn't know what I was doing, but my whole background was science-based. So fast forward a few years, I've gone to university and I've studied biomedical science. Completely different, I know, from what we're talking about here today. With a view to go on to become a doctor, decided that that's not something that I want to do. Again, was reintroduced to another broker who's turned into a long-time friend and basically said, look, I want to do what you do. How do you do it? You sit down with people, you make their dreams come true. You transform £50 notes on the table into bricks and mortar, into a cash-generating asset. How do you do that? We don't get taught this at school, and I think that's actually quite sad. So the fact that someone was willing to give me that time, sit down with me and actually explain how it works, what is an interest rate, it resonated quite well. And I think that was like, I want to do this. I want to teach people how to do this. I want to grow people's wealth and, hold their hand through that journey. So I moved into, again, something completely different to mortgages. I moved into education franchise management role. I was there for a few years over COVID. I was like, you know what? Nah, let's do this. Let's get my exams done, move into the field. Called another mortgage broker friend. I don't know how many mortgage broker friends I've got. And I said, look, I've done my exams. I need a break in the industry. Can you help me? And it just so happened that they were hiring at the time. They took a chance and took me on as a trainee. So always grateful for that. And here we are today.
What is it about the mortgage advisor that got you on the hook? Because as you know now in the industry, it's not just about someone coming in, telling they want to buy a property, fill in a form, and you then go and arrange a loan and then say, see you later.
Yeah.
Actually, people really don't understand what a mortgage advisor does. They are a very critical part within the whole process. And it's like, they will hold your hand through. Because there's loads of emotions at the same time.
Yeah.
And it is quite a complex maze to go through as well. But what got you so hooked on that mortgage advisor? What was it about that particular mortgage advisor? Because clearly it's touched you. So he's done something. Yeah.
I think it sort of goes back to the relationships that you're able to create As I said, I was so young coming up through school, and your day to day is the people you hang around with at school. You come home and it's your family. I had no concept of networking, building relationships with people, and how it actually transpires to have a relationship that is fruitful down the line. And from the first week of speaking with this person, they really understood the circumstances that myself and my family were going through, sat down with us, and just there was no money to be made, kind of thing. They weren't doing it from
You
a
mean there was
place
no
of,
money for the mortgage advisor to be made?
yeah, in the sense that
So
it
they were
wasn't
investing time in you.
exactly investing time in me, but didn't ask for a single penny. Aside from what their broker fees or commissions they might have earned, that's separate. But when someone really sits down with you and tries to understand where you're coming from, explain their experiences and how that can translate onto how you can grow from it, is very impactful. And I think that's where it hit the nerve. Like, damn, this person, 2 weeks ago I didn't know them, but
They now know everything about
they
you.
know everything about me, and I understand a lot more about who they are and what they do.
Yeah.
I feel like I've known them for years.
Yeah.
That was the impact this particular advisor had on me, and I think that's the impact now I wish to carry forward with my clients.
Yeah, and I think it's not just a one-hit wonder where they just come and just see you once and done.
Yeah.
As an advisor, you're investing your time into your clients to really understand it, and that can only happen via a couple of meetings.
Yeah.
Because the situation might be quite fluid and it changes directions. And what impact did it have you as a family with the advice that you actually got from that broker? How did that kind of reshape your life, your family's life? I mean, it's quite a personal question.
Yeah, no, that's completely fine, Chan. So, I mean, I think that the one word to describe it is options. We all want options in life, whether, we say we want money. Money does not buy happiness, but money does buy options, kind of thing. So options was the thing. And what I mean by that is he presented scenarios to us. This is what you can do. This is what you can't do. This is what you can afford. This is what you can't afford. Actually, there's not enough income in the household, so maybe we need to do this. We need to do that. We had never thought about those sort of options before. It was just, straight, damn, we're in this scenario. What do we do? Who do we go to? My background, again, I'm in school. I've got a younger sister. She's obviously in school. My he's a really talented painter and decorator, but he's not in finance. We don't have people in family that are in finance. I was one of the first in the family to go to university as well. So just having that person that knew what they were talking about, we could trust and guide us through that process. That is what was really
the
impactful.
value.
That was the value.
Yeah.
100%.
Because you're going in the dark. You're shooting in the dark.
Yeah.
You don't know what you're doing, what you should be doing, what the process is, and all the options. Imagine not having those options, and then you end up in a place that you don't really want to, and that's the only one chance that you've got.
It's a really scary place that you can be in when you don't know what you're doing and you're
especially
dealing with
when this is one thing I realized as well, is as a mortgage advisor, it's not just advice that you're giving to people when they're just typically buying a house. There are so many other scenarios in the background.
Exactly.
Yeah, which could be quite sensitive. It could be loss of jobs, it could be separation, financial difficulties, deaths, all of that. And we play a role in each one of those scenarios.
Yeah, exactly.
And you're trying to provide a solution where you're able to stabilize things.
Yeah.
And off those things, you're really able to foster a long-term relationship. People don't forget those things.
100%.
And that's why it's like, my clients always ask, people are always asking, why should you use a broker and not go directly to the bank? What would be your answer? Why would you recommend someone see a independent or a broker that has access to more than one lender than to go to maybe a high street lender?
Yeah. So look, plain and simple, you don't need a mortgage advisor. You can walk into your Santander and Barclays and say, I need a mortgage, I'm buying this house, can you help me out? Depending on your criteria and what sort of profile you have, they might say, yes, here's a rate, here's a mortgage, off you pop. And that's all good. You've got your mortgage, you've got your house. But where's the importance in that? Where's the value add? That's where the broker comes in. It's a value add. We aren't comparison sites. We're not going to just say, here's a rate, here's a rate.
Absolutely not. We work in a regulated,
exactly.
and we don't do execution only.
No.
It's pure advice.
It's pure advice. So, the process starts from understanding that client, sitting down with that person for however long it takes, to whatever hour of the night, understanding that person, their family, what their goals are, what they are looking to achieve. Who are you as a person?
Yeah.
I want to know where your next holiday is. I want to know if you're planning to have kids. I want to know if you've got a pension pot. I want to know if you're saving. I want to know if you're receiving gifts from family. I want to know it all. Give me the information. Let me process it and see how I can help you with it. That's where that starts. That's where the value add is. Once I know you, I can then position you in a way to the lenders that I know are going to accept a mortgage from yourself, or offer you a mortgage, I should say, and go directly to them. Why should you waste your time? Why should you be on the phone ringing up the houses? Barclays, I need a mortgage. No, all right. Santander, I need a mortgage. No, all right. Halifax, Nationwide, Accord, whoever it is, don't waste your time. Go to someone that knows what they're talking about.
And the negative impact on the credit score every time.
Yeah, exactly. And that's a massive factor. And all of these lenders are going to be looking at these sort of things. So do it right the first time and you'll be grateful. I think don't try, get it wrong, and then you put yourself in a worse off.
Yeah, and I think it's about leave it for the experts to sort out.
Exactly.
We were on our way down to this podcast, and 5 minutes before we get into the show, we've got a case that's due to complete on the multiple dwelling relief that's expired.
Yes.
And the case has gone belly up last minute.
Yeah.
Yeah. Everything comes to a standstill. So unless you know what you're doing and how you're going to do it, it can be quite a costly exercise.
Exactly. Yeah.
And having that broker there is just that extra layer of comfort. Now, what we experienced this morning, our client wouldn't even know what's gone in the background.
Yeah.
We've jumped onto it, resolved it before it's exploded and become a bigger problem.
Exactly.
Yeah?
And it's not just us as well. We've got to remember the team around us. We're lucky enough to work with, you had YVA solicitors on the last episode. I hope you don't mind me mentioning, but they're also working on this deal with us. So it wasn't just the lender calls us saying, this ain't right, we're not doing it. It's, right, let's see what we can do. We liaise with the solicitors, liaise with the client, the agent on the other end who's selling the property. We all came together. How can we make this deal work? Got it done.
Yeah, it's good. Look, that takes us on to the next bit is, I think what we wanted to really understand specifically on today's episode is to kind of focus and talk about how we can prepare first-time buyers. Yeah?
Yeah.
So as a first-time buyer or someone who's assisting a first-time buyer, that might be a parent or a partner, what advice could you give to that first-time buyer and to give themselves the best opportunity to get themselves onto the property ladder? And what I'm talking about is, there's a lot of prep work that needs to be done. You've got to get your income sorted, make sure your credit files are all up to date. Do you want to just talk to us about a little bit more detail about all those little components that have an impact? So, the credit scoring and personal loans, student loans. What can clients do in advance before basically starting that journey of starting to do viewings? Would you say go and do viewings first and then start arranging your finances, or say get the mortgage sorted out first, then start looking at property? What's the best way and how best to position a first-time buyer?
I think it should happen in tandem. A lot of things happen together, again, which goes back to why you should have someone liaising with you and taking you along that journey. Do you look for a property first and then the mortgage? Do you do the mortgage first and then the property? What happens first? Happens together, I think. You should know what it is that you're looking for. If you're buying on your own, if you're buying with your partner, your mum, dad, whoever it might be, what are you looking for? Is it a 2-bed? Is it a 1-bed? What do you want? What is your goal? And then approach someone like myself or another mortgage advisor or broker that you may know, and discuss that scenario with them. Look, I'm looking to buy a 2-bed flat. Can I get a mortgage? This is my deposit. So I think that would be a first good point to start with. What's your deposit? Where's the money coming from? Is it built up via your own savings? Are you receiving a gift from maybe mum and dad or an aunt or an uncle, whoever it might be? Is that money that's coming in the form of a gift, is it located in the UK? Is it abroad? What country is it in? How were those funds accumulated? These are all questions that we're going to ask. Ascertain the amount of deposit that you've got and how much you're willing to actually put down for the mortgage, for the deposit for the property, I should say. But then also, it's not just the deposit that we're worried about. What about your legal fees, your other associated costs, stamp duty? So I think budgeting is a good place to start, alongside understanding what it is that you want from a property. From that point on, understand yourself in terms of what is your financial stability? How healthy are you, financially speaking, on paper? So again, that could start with your income. What do you do for work? Are you employed? Are you self-employed? Do you have your own company? Are you a limited company director? Do you draw dividends, salary? Are you a contractor? Are you on a fixed term contract? Again, all of these sort of things. Look at your employment contract. Understand, actually, what do I do? How am I structured? What's my pay structure like? Once you know that, come back to us and we can help you understand what that is. We'll review your contracts and everything for you. And I think then at that point, you've got a good understanding of you, your income scenario. Move on to your credit profile. Do you have any outstanding loans?
What do you mean by credit file? You mean credit reports?
Your credit reports.
And where would one typically go and get that information if first-time buyers don't know what is a credit report and where to obtain it? What is it that you're looking for within a credit report?
Right, yeah, no, great question. So what is a credit report? So a credit report essentially is your financial profile on paper. It tells us how many loans you've got, how much they're for, your credit cards, your financial associations. Are you on the electoral register? Are you registered to vote? Are you associated with any CCJs, so court judgments or mispayments, bankruptcy, those sort of things? Fraud, that's another thing that comes up on these things.
One thing I noticed that we see on our credit reports is telecoms.
Yes, yeah, that's a big one.
Mobile phone companies tend to be one of the pain in the backside, and it'll be like they have either not cancelled a contract, and a direct debit for 38 quid, and that 38 quid could have a huge impact depending on where you're going.
I'm sure we'll come on to tell a few stories on that as well, for sure.
Definitely. I think, and in terms of credit reports, where could one get one from? Is it free? Does it cost?
I mean, there are some free ones, there are some paid ones, there are free trials that then turn into paid monthly subscriptions. But just to name off a few, you've got Experian, TransUnion, Credit, credit reference agencies. We like to use a company called Check My File. Again, not a sponsorship, but we know that it's worth what it's worth what you pay for it.
And I think that one in particular, because it actually covers the main three agencies on one report, it stops you from kind of signing up to three different, because it's not every lender uses the same reference agency. So
some will see different things, and again, we can advise on how to use that to help obtain a mortgage. But again, I think some of the more common ones, Experian is probably the most well known. It's a simple sign up, put your name and address into it, and it has features where you can lock your profile, so then it prevents fraud and things like that. So very important features, but people often don't actually look at their credit report until they're ready to go and obtain a mortgage. Have a look beforehand. It does a soft search. It doesn't really impact your credit score when you're looking at it, but it's good to know what your financial and credit position is.
Yeah, definitely. Look, I think that's really important that people kind of have those reports prepared in advance as well. I'm just going to go reverse back a bit. We talked about various types of income.
Yep.
People have this false impression that you've got to be in employment for a certain period of time, whether it be 6 months or a year before you can apply for a mortgage. Yes, majority of lenders out there want you to be in that current employment for a minimum of 3 months. With at least an 18-month track record of employment. But there are some employers that basically, actually, if you've just got your first job and you've got an employment contract, that they will take that as a form of income as well. So I think it's important that first-time buyers know that they still have an option to get onto a property ladder very early in their employment career as well.
100%.
Because, as I say, having an employment contract, there are lenders out there that will accept it.
Yes, exactly. I mean,
as well.
I think we always say that there's a solution for every situation. And in this scenario, if you are someone that is newly employed, or you might even be on probation, there are lenders out there for you. And it's not, when we say lenders out there for you, we don't just mean we're going to have to go to like a tier 3 lender that's going to charge you 10, 12%. No, on the high street. And they'll be more than happy to lend you what you need, as long as we can evidence it and it's all done in a compliant regulatory manner. We've got an employment contract, a letter from the employer. Maybe you've even got your first payslip. We can use that and we can make it work.
Yeah. And, it's important also to clients know that when they talk about lenders, people tend to typically think that lenders are just the banks that we used to see on the high street, because we don't see many of them nowadays, because all of them get turned into coffee shops.
Tell me about it.
But actually, we as a firm have got access to, I think, just over 52 lenders in terms of mortgage lenders, but just over 200 lenders across all the other specialist finance arrangements that we have. So there tends to be a solution, like you say, for everyone out there.
We'll place a case somewhere, and if we can't, we'll help you prepare for when we are ready to do so.
Definitely. Look, I think in the world that we live now, where property prices and income, there isn't that balance. So we're always reaching out for the bank of mum and dad.
Yeah.
I think it's important to know, we educate our first time buyers in terms of how people can actually help the first time buyers in terms of a deposit. What does that deposit look like, and how is it actually communicated on an application form? How is it? What is it? What is required to support that deposit?
Yeah.
Because I know it's a gift, isn't it?
Yeah, ultimately. I mean,
Because a bank will not allow a deposit that's basically a loan, where someone's expecting that money back.
yeah.
So what is acceptable then?
I mean, look, let's outline a typical scenario. You've got a client who's looking to purchase their first property. They want to move into it, and they've approached dad to say, hey, I need £50,000 to go towards my deposit. Can you help out? Dad had said, he says, yes, let's go for it. It's not as simple as dad transfers the 50K to the child and they pop and go buy a property. Again, we are in again, it's that regulatory world. We have to be compliant. We have to make sure we've got the right documentation in place. We've got a duty to the customer and to the FCA to make sure we do our anti-money laundering checks, and that all forms part of it. So we're going to ask you, where is this deposit coming from? How did that original deposit get saved up? Is it from, did dad sell a property? Has he sold a car? Is it just from regular savings? How has he built the pot up to be able to afford to gift it to you? And just touching on it being a gift, if it is a true gift, a few bits of evidence that we might need. We're going to need dad's passport copy. We're going to need a bank statement from him actually showing that he's got the funds. And more importantly, we're going to need a gift-door letter. So it's a letter that goes to the bank and it sits within our records as well to state that it is a true gift and that dad retains no interest within the property that the child is going to go and purchase. In the instance that it is actually a loan and not a gift, and where it actually needs to be paid back, yes, the lenders you can go to are restricted and they will take that loan as a commitment, and therefore your affordability on the other side will drop because now you're paying for a mortgage as well as paying dad back for the deposit. That all needs to be clarified from the outset. So that's a family discussion, and sometimes we can get involved in that and help guide where it fits there.
Can you just also kind of tell us, we hear the terminology AIP, DIPS, decision in principle, my estate agents ask for a mortgage approval. What is it, and what is required to obtain one of those?
Yeah.
And why is it important to obtain that when they start their journey early, when they start looking to buy a property?
Yeah, I mean, to answer, I guess we'll start with what is an AIP. So AIP, agreement in principle, DIP, DIP, decision in principle, or mortgage certificate, all three of them are the same thing. It essentially is, if you want to call it, it's a half mortgage application. You've submitted some data to the lender along with your credit commitments and credit profile. They come back and say, well, one of three things can happen. One, it's an accept, saying, yes, we're happy to accept this client. Onto our books for mortgage lending. Two, it can flat out decline to say, nope, we don't like this client, we don't like their profile, we're not going to be able to lend. Or three, it's going to refer. That essentially means it goes into the underwriting pot. Underwriter is going to have a look at it manually. They'll come back to you and say yes or no. Now, again, those are all interchangeable terms. And why is it important? Well, I think I'm going to flip that question back to you, Chan, actually. So you run a sales and lettings agency yourself. As an agent, if someone approaches you saying, here's my agreement in principle, it says I can borrow X amount, and someone else comes to you and says, Chan, I want to buy this house with no financial backing, which one are you going to view more favorably?
Look, it's always going to be someone that's kind of prepared. It makes them more credible.
Yep.
It allows me to make my judgment to see whether they can perform because they're a couple of steps ahead. It allows me to be able to negotiate for them at the best possible price because I can kind of guarantee or give assurance to the vendor that the potential buyers will be able to deliver. So it's a huge tool to have. Yeah, because when you're coming in and like just starting doing viewings on the property and you don't even really know whether you can get a mortgage or how much you're getting in a mortgage, or what you can afford to buy, then you might be just kind of like, again, shooting in the dark, putting offers in on things that you couldn't really afford. And then what happens there is that you end up basically damaging relationships. And, you know, when buying a property, it's like your biggest asset. There's emotions attached to it. People are moving and selling for reasons. And, you know, it's not liquid. It's a very expensive exercise. And people investing time and money. And when things don't perform, then, you know, people get upset, relationship breaks down. And, you know, sometimes things can go wrong, which everyone can understand. But what you tend to find is that you will end up upsetting the vendor and you end up upsetting the agent, that when you go back to them again, they won't give you that love and the attention, because they'll say, well, you know, last time I took you serious, you came to view it and I showed you 10, 5, whatever number of properties. And then at the end of it, it was a dead duck. Yeah. So having that agreement in principle is like some kind of a promise to say, look, I've been to a expert, a financial advisor, a mortgage advisor. I've sought advice. I've looked at my budget. I've looked at my credit check. And now I want to go and see viewings. And here, this certificate that has a validity period of, you know, 30 days or 90 days, depending on which lender it is. And you can take multiple copies and hand it out to the agents on the number of properties that you want to view. But I think it's quite a very powerful tool to have when actually starting your journey, whether it's buying a property for you to live in or even a property that you may be looking to purchase as an investment. Making sure your numbers, and that's what it's all about.
I think just to touch on that fact that, you know, a decision in principle, as I mentioned, it's almost a half mortgage application. It's not a full guaranteed sign on the dotted paper, yes, this is a mortgage. It's more of a promise from the lender to say, you know what, you're good for it, kind of thing. Maybe not in those exact kind of words, but, you know, that's what it entails.
What documents do you normally typically need? If it's just a decision in principle, what are the basic documents that you need to get a decision in principle?
So again, basic documents, again, I want to do a full fact find. I still want to understand. By the way, when I say fact find, it's just a sort of an industry term to say knowing your client. I want to know my client to the full extent, even before I've approached any lender. I think that's the smartest way to approach it.
Of course.
So you're not thrown with surprises. You know, so yeah, I want to know and understand the client in full. I want to understand their address history, their income profile. Have they had any name changes? Are they recently married? Has their surname changed? Those sort of small details. More importantly, I want to understand what their current commitments are. And again, we can get that from a credit report. What's your outstanding balances on your credit cards? Do you pay them off in full every month? Do you have any loans, hire purchase, car finance outstanding? Do you have kids? Do you have dependents? Are there school fees to pay? All of these things, like what are your commitments? What's your credit profile? Because those are the numbers, the digits that get plugged into the lender's system, which ultimately gives us a response. Down the line, we need solicitors' details, property details, all of that. But for now, it's the pure facts. What comes in, what goes out, who are you?
Yeah. And in terms of like other documents, bank statements, pay slips, would you require those?
Yes. So if you're employed, we want to see at least 3 months pay slips. But again, there's instances where we might not have that. New job, probation, employment contracts in that sense work. We want to see 3 months bank statements showing the salary coming in, assuming you're employed. If you're self-employed, then we want, typically speaking for most lenders, 2 years worth of trading history. So that might be your tax calculations or SA 302s, showing 2 years worth of income coming in, along with the bank statements supporting that. You know, you can't have £100,000 on your tax calculations and you've got £2.50 coming in every month. You know, it needs to line up. It needs to make sense. We will do those AML checks.
Of course.
In terms of the income documents, that's pretty much there. Bank statements, we want to see proof of deposit. You know, where is that money coming from? And ultimately, that builds that profile for that client for us to go to a lender with.
Cool. Okay. Look, I think that gives us a real nice intro to what's expected in that first meeting and how you can be prepared. I think now it's like, you know, let's go fast forward. You've given them a decision in principle, so they go house shopping. Yeah. Typically, I've seen clients walk in, get a decision in principle, and a week later they've already found the house. That's how quickly the process is. So assuming they've now found the house and they've given you a call and say, VJ, you know what, we found this perfect dream home. We've got the offer agreed and everything. And they're like, what happens now? So what are the next steps?
So they're going to be very happy. They've got a property offer that's been accepted by an agent like yourself, and you know they're really raring to go. So they're going to come back to us with the full address of the property. Something called a memorandum of sale is usually very helpful for us. A memorandum of sale essentially, or a sales memorandum, contains information about the property itself. So what's the full address, purchase price, who is the vendor or the seller, who is the seller's solicitor, who is the buyer, so typically our client, and who is the buyer's solicitor, which is very important. So I think even before coming to us,
Just
probably.
stopping on there. So
Yeah.
how do they choose that? I know we had our conveyancer panel. How do you kind of guide your buyers in terms of what type of conveyancer to use, or
So
how important is
I
it?
think
Again?
that goes with, how do you decide where you're going to go have dinner tonight? Is it Italian, Mexican? You're going to Google whichever one's probably got the best reviews. You're going to pick up the phone and say, can I get a booking? Similar process with mortgage advisors, with solicitors, conveyancers. Research, get price comparisons. You don't have to go with the first person that you pick up the phone to. See what they're charging you. Solicitors' fees can vary greatly. I mean, if you pick someone that's based in Mayfair, they might charge you $3,000. You pick someone that's a little bit closer to home, North London, wherever it might be, might charge you $2,000. That's a lot of money,
Yeah.
And I'm not saying that the services are better or worse. It's just a fact, So who do you want to work with? And I think we're big on relationships. Who can you create that relationship with? Don't see this as a one and done transaction. These people are going to be with you on your journey, your property buying journey, for assume the rest of your life. So pick those people that you want to be around and spend time with them. Pick up the phone to the solicitors. Hi, I've got this scenario. I'm a first time buyer. Will you be able to hold my hand through the process? Or are you just going to be here stamping documents and trying to get me through it? I think that's how we pick. And then ultimately we've got our own recommendations. So if the client is really stuck and they can't find a conveyancer, hey, give these guys a call. They're our guys. They know what they're doing. We work with them well, and take it from there.
Okay. So you've got the sales memorandum. So
Yep.
everyone knows who's involved in the transaction. Then what happens?
So we know who's involved in the transaction. We've got the property details. Now, the decision in principle I've given that client, for example, might be from Santander, because at the time, Santander was offering the loan amount needed. They fit within the client's profile and criteria. But depending on the time frame, again, if it's within a week, and I know that Santander is going to be the lender we're going to, we can then begin a full application process. So in order for me to begin that full application process, again, bearing in mind we've already done the fact find, I know the client through and through, we know their financial scenarios and circumstances. I might request documents, again, depending on how long that gap is. If another month has passed, we might need one more month of payslip or one more month of bank statement. And then I'm going to need to know solicitor's details, valuation contact, again, should all be on that sales memorandum. And ultimately, where's that mortgage payment coming from? Which bank account do you want it to come from? I need to know these small bits of information. We then progress on to a full application, so essentially carrying on that decision in principle process, and normally takes about an hour and a half to key a full application in full, and we send that off to the lender.
So
for underwriting.
what are we asking in the full application? So what kind of information is going to make a change in terms of what you're going to advise them?
So I think property type is a big one, right?
Yeah.
So, a standard brick and tile construction property, which is common in the UK, we would call that standard. Most lenders, all lenders really should accept those type of properties. However, we need to ascertain the property that they've been accepted on in terms of their property offer. What is the construction type of that property? Is it steel fabrication? Is it is it wood panels? I mean, there's so many different types, and you might have gone and found a property that actually Santander doesn't accept. So we need to make sure that they're going to accept the property type first. We need to know the number of bedrooms, bathrooms, reception rooms. Is it freehold? Is it leasehold? Again, those are two really common confusions, I think, in the industry. Freehold being where you own the land and the building itself. Leasehold, you own the rights to use and occupy those four walls. How long is left on the lease if it is a leasehold?
Service charges,
ground rents. Yeah, exactly. Any associated costs with the property. We've often found that, it's all well and good. You've got a decision in principle. You can borrow £300,000, and then you've come back with a property, a flat, for example, has a £250 ground rent, but then they charge £5,000 on service charge. Now, that's going to impact affordability. So all of a sudden, you can't borrow that 300 that you were initially told because there's all of these other commitments that have now come into play. And we've got countless stories like that where we've done a decision in principle, and then 2 months later, the clients come back saying, I finally found a property. Great stuff. Congratulations. Let's walk you through the application process. We key an application in. We've had a look at their credit profile. Oh, hang on a second. You just went and bought a new car on finance. Buying the new car is not a problem. You know, you could buy it in cash, but now you've got a BMW where you're paying 450, 500 quid a month for, which you previously didn't have. That's now a commitment. Sorry, you can't get the loan amount that you need.
Yeah.
Which is very, very impactful. And it's quite sad actually sometimes. So that's where the right advice comes in. You've done that decision in principle.
Keeping that regular contact on that journey. It's not they've got the decision principle, off they go.
Off you go, yeah.
I always say to them, let's keep in contact. When they're going to do viewing, share that property that you're going to view beforehand.
Yeah.
I can kind of give you a heads up and say, you know, be careful about the structure, or, you know, it might have like solar panels on it and stuff like that. People don't really know to look out for those things. And that puts limitations on the type of lenders that are going out there.
100%.
I think it's also important to know that within that fact find, we really want to understand their short-term and long-term goals. So we want to understand basically, you know, where are they now? Where are they going to be in the next 4 or 5 years in terms of employment? Where are they going to be in there in terms of their family situation? They may be looking to start a young family and have children. Does that mean one of the parents or one of the applicants is going to be off work? What happens to their cash flow on a monthly basis? And I think it's also important to know, we also try to establish their attitude to risk. Because when we talk about mortgages, there are thousands of products out there. Tens and thousands of various different products. How do you know which product's the right product for you? Yeah. People talk about trackers, people talk about fixed rates, talk about offsets, discounted rates. What does that all mean? And then on top of that, you've got 2 years, 3 years, 5 years. Why should these people get those? So during that conversation and during that having that fact find, we're trying to establish all of that.
Exactly. Yeah.
To basically be able to give that suitability and recommendation. I think it's also, people forget about basically protection.
Yes.
Yeah. And we have to also remember, it's the biggest asset that you're buying. Yeah. It's the biggest liability that you're going to have. And it has to be taken seriously. You know, we can't be wrapped in cotton wool all the time. Things happen. Yeah. It's no longer you have to be a certain gender, or you've got to be a certain age, or you've got to come from a certain background. We'll hear about all sorts of things happening. You know, how do you safeguard yourself? And it's important that we have those conversations with our clients very early during the application process. I'm going to be very clear. The days of it being mandatory is no longer there. It's the client's choice.
Yes.
But it is the advisor's responsibility to establish that and identify that during that early conversation. Yeah, because you don't want to be in a situation where you don't have that conversation and something does happen and then you leave yourself exposed and you're leaving your client exposed.
Yeah, which is the worst of it. I mean, I think it goes back to, how do you choose your advisor? Again, it might not just be as simple as, what do the Google reviews say, or what does the word of mouth say? But, you know, I think we often forget, and I think this is a mistake, not a mistake, but it's a shortfall in the industry, where a lot of us are mortgage and protection advisors, not mortgage and then protection advisors. We should do it together. I think it goes hand in hand. Again, it's all consumer duty related, client focused. So it's not just, again, get you a mortgage and off you go. It's get you the mortgage. How do we get you the asset and help you keep it?
Yeah, and I think it should be built into the budget.
Yes. Yeah.
So when you are putting that budget, you put that budget in there to give you an opportunity to factor in protection. Because you know what, it's sad sometimes, because we insure our cars, we insure our mobile phones, we insure our pets, but then you question and put your question about how much do you want to insure yourself?
Yeah, or do I need it?
Or do I need it? Yeah. Well, I'll think about it later. You know, I think there's a massive educational part there.
100%.
And I think basically borrowers and clients need to really engage in that conversation. And I think it's a conversation that needs to be happening within the household.
Yes.
Outside of a meeting.
And I think that is, it's, especially, you know, within the Asian community, I don't want to talk for everyone, but generally speaking, it's quite a taboo, isn't it? To,
Yeah.
in your household, to talk about money, how much you earn, the properties that you have, the assets you have,
What
the
happens when I
insurance.
die and all that.
What happens? Yeah, what happens when I die? Where does my money go? What about my inheritance? And this, there's a lot of drama and politics that go around it. Just talk to someone. Talk to someone that's gonna get you your finance. They're gonna talk about your protection and protect your assets. But then they're going to introduce you to the people that are going to do your wills for you, your trusts, your LPAs. You know, when I was that 17-year-old kid wondering what a interest rate is, I couldn't tell you what the hell an LPA was, or a will, or a trust. It's only after coming into the industry you understand the importance of it, and realizing that, you know, that client that you did advise on in 2020, unfortunately now they've been diagnosed with cancer, they can't go to work, they've got a £400,000 mortgage to pay. Mum's busy with the kids, dad's got this diagnosis, what are they going to do? Oh, hang on a second, do you remember we did that critical illness policy for you? Nothing can fix what you're going through, but here's £100,000 from this insurance provider
breathing space.
who's going to help you out.
Options.
Yeah, spend time with your family and really recover, get back to where you need to be. That's the importance of it. No one wants car insurance. No one wants to pay £2,000. I mean, premiums are ridiculous nowadays anyway, but no one wants to pay £2,000 for car insurance. But bloody hell, when that car gets into an accident and is written off, you're grateful for it.
Yeah, definitely. So once that fact find's done, or you've established the needs of your customers,
Yep.
we go on to make a recommendation.
Yes.
This is when you've actually now digested everything your clients told you, and you go and basically relay that back to the client, where you're summarizing your findings and you're matching their needs with your objectives. Yeah?
Yes.
They agree to your recommendation. What's the next process? So you send off this application to the lender.
Yep.
And everything goes quiet.
Yes. Yeah.
But what actually goes on in the background?
So that, I think my first email that goes out to clients is, "Hey, client, your application is now with the lender. I'm warning you now, I might go quiet for the next few days. Don't worry, we're still working on your application in the background." What does that mean? It's basically we're giving the lender time to review the information we've given them. You know, nothing is instant. We've sent them a lot of information about the client, the credit profile. We've sent them documents, their pay slips, their credit reports, their bank statements, deposits, where they're coming from.
They go out and reach out to employers.
Yeah,
they
might get references, and this stuff takes time. You know, I think you have to allow at least 3 to 5 working days for an underwriter to just understand the case. You know, if me and the client, we might have spent weeks talking with each other about their scenarios, circumstances. Underwriter's got about 3 days to do it, maybe, with the information that we've given them. So what happens next? Well, while the underwriter's reviewing the documents and the scenario, again, it's lender dependent on the timeframes, but generally speaking, they will then liaise with the valuation team within that particular bank. So going back to the Santander example, the underwriter at Santander will be reviewing the application. Santander's valuation team will then pick up the phone and get in touch with the agent that's selling that property to our client. Hey, we need to book an evaluation. We're going to send a surveyor around. What is a surveyor and what they do? I think maybe, do you want to touch on that, Chan, from your
so
agency back?
surveyors are there to establish the overall value of the property, to establish whether it's a suitable form of security from a lender,
Yep.
taking into consideration majority of time that they are kind of putting the majority of the cash in, so the risk is highest from the bank's point of view.
Yep.
But I think it's important to establish, and this is where there's a slight confusion, is they're there to just check the security, see where it's good form of security for their lending, and if it's worth what you're paying for.
Yep.
They're not there to check the overall condition and the wear and tear of the property. And that's why, depending on the type of property you're buying, location, age, overall condition, if it's been kind of a little bit worn down, it hasn't had TLC, you can see the money's not been invested in it and it's kind of been left a bit derelict, then you may want to look at various other types of surveys. Yeah. So you've got your kind of home buyers surveys, which is a really, really detailed survey, which is carried out by a qualified surveyor.
Yep.
He's there not just to establish basically the value, but the overall condition. To tell you, you're buying this property, bring to your attention things that need attention straight away.
Yep.
Attention might be required in the next 5 years or 10 years. And these things could be, wiring issues, structural issues, roof might need replacing, windows, and these are expensive things.
Yes, yeah.
So you have to kind of budget into it. So that investment for that additional survey, which might cost you £1,000, could potentially save you tens of thousands in the near future.
100%.
Yeah,
Especially if that's your main residence. You're going to live there with your family. You want it to be sound.
because you've got to remember when you're going to, when these people are going to view a house, they're in there what 10, 15, half an hour. Yeah.
Yeah.
Like, you know, you're going to go and spend hundreds of thousands of pounds and you're making that decision based on a 15-minute viewing or a 30-minute viewing. My wife goes out shopping for a dress and I'm there for 3-4 hours.
Yeah.
Yeah. So can you imagine? You're making the decision to buy a house so quickly. All right, don't get me wrong. You're going to go there, maybe have a second viewing, third viewing.
Yeah, of course. Yeah.
But that decision, the actual process is very quickly. So you don't really know what's behind the wallpapers. You don't really know what's underneath the carpet. You haven't even gone into the loft. So that's what that surveyor there's there to do the home buyers report. It gives you that extra layer of comfort and assurance that what you're buying is sound.
It's almost like doing a service on the home, isn't it? Like
Absolutely.
go and have a
Little
look.
MOT.
Little MOT, that's it, yeah.
And it gives you that assurance because it's kind of insurance backed by the surveyors to say that I certify that what I've inspected is sound and I've picked it up. Because if there isn't been picked up, he or she is responsible for it.
Yeah.
Yeah. And then you've got a survey which is slightly a lower survey from a home buyer survey, which is a building survey. And in a nutshell, it just checks the building.
Yeah.
Structurally, subsidence, damp, any movements, and that's what it is. Yeah. So those are the different types of surveys. But as I say, typically you don't want to need to do that if it's a new build home because they tend to come with like 10-year guarantees, structural warranties.
Got their building regulations.
Building regulations, everything's signed off. But typically properties that tend to be kind of 90, 100 years old, it's best to get them checked out because, you know, as much as they're solid, you just need to know that there's no underlying issues on it. So it's always nice to have that conversation during that mortgage advice process that you discuss with the clients, the various types of surveys that you can have.
So then the value has gone out. Now they've come back. Assuming they've done just the basic mortgage valuation.
Yeah.
They've gone in again, 10 minutes. They've had a quick look around and they're out. Once that valuation is back, the underwriter should have completed their initial underwrite. Assuming they've got no more other questions, bearing in mind at any point during that application process, to the point that mortgage offers, the underwriter is going to be back and forth with us, which is why with clients sometimes we go a bit quiet because we're busy on the other end, liaising with the underwriter, positioning that client in a way that allows them to be accepted for that mortgage kind of thing. So, yeah, liaising with the underwriter in the background. Now that valuation has come in, the underwriter is then going to assess the valuation against the profile of the client and the case. And I think you might agree there's maybe one of 2 or 3 things that can happen with a valuation. Either the valuation comes back as is, so we've applied at a valuation of £600,000. Yes, property is valued at 600. Cool, Bob's your uncle, move on. They might come back and say, actually, no, we think the property is valued at 550, not 600. And then that's where the valuer just moves away. Underwriter takes a view on it, and they might come back to us to say, guys, I know you're buying it at 600, but it's 550. This is throwing the loan amount off, or you might need to choose a different product. As an agent, as an advisor, I'm going to take that to my client and say, look, it's been valued at 550. You can do a couple of things there. You can go back to the agent, ask them to help you negotiate the purchase price lower, or you take the hit on it, purchase at the higher price, and we'll see what we can do in terms of the product.
Typically, lenders don't tend to like that.
Yeah.
So if you're trying to pay for something more than what it's worth, it's a red flag.
Yeah.
Lenders like, well, why do you want to pay for something which is
that's
not worth what it is?
Yeah.
So typically, first stance would be, we're going to reduce the loan amount. Yeah, which means that you're either going to no longer proceed, or you're going to go back to the agent and say, here's my copy of the valuation report. Your property that I'm looking to buy is not worth what it is, and I've got it backed with a lender's valuation. And it's down to the agent to be able to renegotiate that price.
So how do you view that? If as a client I came to you with a valuation report to say, Chan, this ain't worth what I thought it was going to be worth. Yeah. What are you then doing to help me in my scenario?
Of course, look, it's from a professional surveyor, so I have to I can't question what is written on there. I have to go back and look at that report because Sometimes it could be that data on that report is incorrect.
Yeah.
And it needs kind of a bit more information, put some more weight. People don't, surveyors go down there, especially when they do a basic one, and there might be a garage at the back of the garden, and the person selling has forgot to mention that there's a garage or a piece of land.
Yeah.
And that's had an impact on the valuation. They've got the number of bedrooms incorrectly, as sometimes we've seen they've come in there. So we'll go through that report to make sure it actually is a true reflection of what's been sold. But in the scenario where basically the property description and the survey tallies up, and there is genuinely a kind of a difference in price, then I would have to kind of have a mature conversation with my vendor and say, look, I completely understand that this is what we're trying to sell, and this is what your want sign in terms of a price, but a lender's come back and said basically it's not worth that.
Yeah.
So it's going to end up two ways. Either the vendor is going to say, well, I can't reduce the price because I need that to basically go and buy something else, or I need that to help me financially for other reasons, or they're going to be negotiations.
Fine.
And typically, if you have the right relationship with your vendor, and you have a working relationship, then you should be able to come to a negotiation and come back to a number that works for all parties.
No, that makes entirely makes sense. Yeah. So then, assuming that process has happened, we've come back, both parties are now happy again. The lender's happy. If the underwriting is all good, they understand your scenario. They're happy with your documents. They're happy with the deposit. They're happy with the valuation. At that point, is great news, because then the mortgage typically goes to offer. What does go to offer mean? Well, that's when the full contract pack goes out to your solicitors. We get a copy. Client gets a copy. It outlines any special conditions on there. That you need to pay this credit card off if in order to proceed with this mortgage, if that's something that we've agreed with the client. That's where sort of we release the happy balloons and everyone's grateful for it and whatnot. But then we move on to that legal process, which is a whole other scenario in itself. Other things might come up in the searches, between the inquiries between our clients' legals and the seller's legals. So again, it goes hand in hand. We're still liaising with the solicitors in the background.
And this is also important to that we clarify that as well. It's like, does your journey as a mortgage advisor come to an end once a mortgage offer comes out?
I mean, look, technically speaking, on paper, yes, I've done your mortgage. You go and crack on with the legals. But again, that's cookie cutter. It's processing. We're not going to process and get you on your way. It's carrying you through that journey. It's so important. Your mortgage advisor is someone that's with you, from the very day you have the inception of wanting to purchase a property, through to you receiving the keys, through to doing your protection for you, introducing you to your wills and trusts and LPAs, and then should be having that review every 6 months, every year. Hey, you're married now. Is there a change in your circumstances? You've had kids. Congratulations. Is there anything that we need to change? Or, now you want to maybe remortgage and purchase a new property, or you want to buy an investment. It's an ongoing journey. We can't just get the offer and leave them to it.
Yeah. So we get them to offer. We hold their hands through the whole legal process. Answer, because there's going to be a lot of stuff that comes off that conveyancing process. I know in the last episode we covered that, so we're not going to spend too much time in terms of what the conveyancer does. But in short, it's basically making sure that the lender is satisfied with the building, the way it's set up.
Yep.
It's a good form of security, and there's no underlining issues on there. And then if all that kind of goes well, again, typically 6 weeks, 8 weeks if you're buying a typical freehold house, right, maybe 10 to 12 weeks if you're buying a leasehold, because it's a bit more technical, and there's leasehold packs and management packs, which include things about where maintenance of the buildings and service charges, and it just creates that extra layer of work, and that's why it takes a little bit longer. Then, assuming that's all fine, everyone then is gearing up for exchange. Yeah. What does that mean?
So exchange and completion, two sort of terms that go hand in hand with each other. Exchange essentially is your exchange of contracts, where one party, you're swapping your contracts and you're signing. Once contracts have exchanged and you've signed and you've paid your 10% down payment on that, you are now legally liable for that property. So anything that goes wrong with it, you're committed. You're legally liable. And I think since we're talking about it, legally liable means that if anything goes wrong, it's your problem. So your home insurance comes into that. Most, if not all, lenders now, it's a mandatory requirement on the mortgage offer that you must have compliant buildings insurance, at least buildings insurance. You can have contents as well, on exchange of contracts. That's to protect the lender against fire, theft, damage, subsidence, flooding, whatever might happen between you signing on that dotted line and you receiving the keys. You have to protect the lender and yourself ultimately, because you're going to be the one that forks out the money for the damages if you don't have the insurance in place. So then once you've signed on the dotted line, you're legally liable. Completion then takes place where your solicitors will request the funds from the lender. You will then transfer the balance of payment to your lender, so to your solicitor. Solicitor will then transfer those funds to the seller. You receive the keys. Property is now yours. Now, is that our journey done? Not really, because then there's follow-up questions that go with that. You know, right now you've got your monthly mortgage payments coming out. You're going to call them on their first month. Hey, payment has come out, all right. You guys okay? Settled in?
And they get piles of paper.
And they get piles of paper, yeah. So then you walk them through that process and hold their hand through that. But then how does the average person then reduce the interest that they pay overall on that mortgage? You might want to then talk about setting up an overpayment facility where they pay a little bit more than what they're meant to pay every month to reduce the interest or reduce the term, or they split their mortgage payment into two parts where they're paying twice a month. There's a lot of these things happen. You discuss it prior to obviously going to a lender, but I think a lot of that falls to the back burner because they're so invested in trying to get the completion done.
Yeah.
So yeah, you would talk about that following receiving the keys.
And I think that's kind of like really where your journey and your relationship starts in my eyes, because they're now no longer a client. They tend to become good friends. You speak to them on a personal level and stuff like that, and it goes back to like a relationship. But I think it's that aftercare. I personally believe that, you know, our phones and your phone should be on for clients after the mortgage and moved in, that you should be able to deal with all their inquiry, from whether it's, you know, direct debit issues, statements not coming in, you know, a change of addresses, all that it might be, and actually go with that point where you're handing a complete file over to them. You're kind of, here's your kind of final folder with all your mortgage offer details, your direct debit details and stuff like that, and then also go back and let them know that you're available at any time as well, which is really, really important. I think that gives us a real good in-depth in terms of basically what a journey of a first-time buyer.
Yes, yeah.
As you can say, there's so many aspects to it. It's not a straight line. I think it's real clear that we as mortgage advisors play an important role, and why it's important that the earlier you engage with an advisor, the smoother your journey is going to be. And I wish all our first-time buyers a happy journey. And we will call this a wrap and look forward to speaking to you into our next episode. And Vijay, thank you for coming to the show and look forward to working with you.
Yes, 100%. Thank you very much for having me.
Thank you for tuning in with The Property People. Hopefully it's been inspiring, motivational, and allow you to basically connect people in the property industry. Subscribe to our channel, share the link, leave comments about who you want to see, what you want to hear. The more people that subscribe, the more people we can bring onto this channel to motivate you on your journey in the property industry.